Good morning, students. How are you all? Hope you all are fine at home. I am also fine, students. Be safe in the house and pray to God. Okay? This pandemic should get away from our country and the whole world. Okay? Pray for that to God. Okay. In accountancy, we are in the second lesson. The previous day we have learnt the introduction of bookkeeping. Isn't it? Fully we have learnt about the bookkeeping and how it is a part of accounting, and these two are a part of accountancy. Okay, so bookkeeping is the smaller one, then little bigger one is accounting, and accountancy is including all these things, the knowledge. Okay, it's a body of knowledge of accounting and bookkeeping. Okay, so now we should learn about the accounting principles. Okay, so we should know what are the accounting principles. So what is the meaning this principle? Principles means the norms and assumptions. Some rules and regulations we say, no, like that. Norms, that condition. Okay, then the assumption. Assumption, if it is like this only, we can prepare. Okay, so assumption, assuming. Okay, these are developed by the people in order to have a uniform accounting. Okay, so it is accepted universally, the norms and assumptions which are given, okay, by the maybe the international that bodies, in national bodies, regulatory bodies. Okay, they have developed some norms and assumptions. These norms and assumptions are the accounting principles. They are accepted universally throughout the world. It is accepted. Why they have accepted? If they have accepted universally, then there will be uniformity in the accounting. So when we write no balance sheet, the right side the assets will be given, left side the liabilities will be given. Then the business is considered separate from the owner. Okay, all these things are accepted universally. So we could understand, if we see the accounts of India, Indian companies and foreign companies, there will be that uniformity and consistency. That means it is accepted from long before and it is followed now and it will be followed in future also. So there will be permanency or consistency in the preparation of, that means the rules and regulations or norms and assumptions of the accounting. Okay, so that is called the principles. So since they are accepted universally, we can say these principles are generally accepted accounting principles. Generally accepted accounting principles. Accounting principles. If we take the first letter of all the words, GAAP. Okay, they may ask for 1 mark. Okay, that GAAP, that means generally accepted accounting principles. Okay, so we can say these principles only give that a type of framework. To frame a photo, we will have the framework, isn't it, the outer part, or we can say the skeleton is the framework. In that one only our body has been built. So that is the fundamental thing. Okay, from this one, this is the framework which one, this accounting principles, this upon which only the accounting records have been prepared. Okay, accounting records are prepared. So it should be within that one. Okay, the framework will be outside. This accounting records and reports will be within that framework. So based on this principle, that principle only, we can work that we can record the journal entries and we can prepare the reports. Okay, now we can say this principles is equal to, it includes two things. The principles are two. One is the concepts, the other one is conventions. Okay, what are the concept? Here concept means we can say they are the basic assumption that we have studied now, that about the principles. Basic assumptions and conditions. Without these concepts we cannot work accounting. Okay, so the concept means the basic assumptions and conditions upon which, that means like a foundation, okay, upon which this only the accounting has been laid. Okay, so the concepts are the basic assumptions and conditions upon which the accounting has been laid. That means so with this concept only we are preparing the accounting. Okay, the accounts are prepared based on the assumptions and conditions. Okay, these are also universally accepted. Okay, they are universally accepted. That's why they give the uniformity and consistency for the books of accounts. Okay, for the records and the reports. Then now we have studied the concept. Okay, they are the assumptions and conditions. What are the convention? Conventions are that means as per the traditions, or it is the guidelines that we are gained from the usage or through usage or through the traditions. Okay, so we follow that one for years, so we can have them as the conventions. Okay, the conventions and concepts. Now we will learn one by one. Okay, one or two only we are going to learn in this class. The first we are going to learn here. We have 10 concepts and 5 conventions. Okay, the first concept is business entity concept. All these I might have told you. Business entity concept when I was explaining about the capital. Okay, there I have explained the business entity concept. Here business is separate from the owner. That is what. Okay, the business is separate from its owner. Owner is considered separate, business is considered separate. Okay, business one, owner's own. All the transactions are entered based on this. That means from the point of view of the business, not from owner's point of view. Okay, from the business point of view only we will record the transactions. Here I told you when that owner invest capital. Okay, there when I was explaining capital I have taught you. Because it is invested, that means the amount coming inside the business. That is why we will enter cash account data. But if we think of owner, that cash is not coming inside, it is going outside. Okay, but the records, all the transactions, all the accounts are prepared from the viewpoint of the business point of view only. The transactions will be recorded. Okay, and business transactions and personal transactions should not be mixed up. Okay, personal transactions should not be mixed up. Here some personal transaction. One is this capital, isn't it? Introducing capital. Then the other is drawings. I have taught you the person who invests money, that investment is called capital, and the money is withdrawn from the business for his personal purpose, that is called drawings. Okay, So the drawing is a personal transaction, but the amount is taken from the business. So this will be considered as drawings, whatever he has taken from the business. So that will be considered as the drawings. Okay, the amount he has taken from the business for his personal purpose, that also will be considered. Okay, now you might have understood this business entity concept. Here all the transactions will be recorded from that means from the business point of view. Okay, because here as per this concept, the business is considered separate and it is different and it is distinct from the owners or the owner. Okay, even though he has invested money, that is considered separate. Okay, but from the business point of view only, we will record all the transactions, and personal transactions will be not mixed with this business transactions. Okay, then the second one is money measurement concept. This concept also I have explained to you many times. Money measurement concept. What is this money measurement concept? Here this one, it is telling all the transactions. That means only we have studied even in accounting the financial transactions. Okay, so all the transactions that can be expressed in terms of money. Okay, that related money or money's worth we have studied, isn't it? So only those type of transactions can be recorded. Okay, if any non-monetary transactions or any transactions that cannot be measured in terms of money cannot be recorded in the books of accounts. Okay, so all the transactions must be measured in terms of money, how much it values. For example, if we have 5 tables or 5 bags of rice closing stock, we cannot write as it is 5 bags of rice, but we should measure in terms of money. Okay, 5 bag means one approximate rate they will write, and okay, they will enter it. There is one principle how to measure the closing stock, that also you will learn in the this concept and convention. Okay, so now this, as per this concept, all the transactions which can be measured in terms of money can be entered, can be recorded in the books of accounts. So what is the opposite? Any non-monetary transactions or the transactions that cannot be measured in terms of money cannot be recorded in the books of accounts. For example, I have taught you already, if the management is very efficient, sometimes in some year the profit may be increasing because of the efficiency of the employees. Okay, so they cannot write because of the efficiency of the management or the workers, the profit increased. They may write as a report, but that cannot be showed in the books of accounts. Okay, or sometimes they may show very less profit because of a strike, but that strike will disturb the sales, isn't it? Production as well as sale, everything. But that strike cannot be shown in the books of accounts. Okay, or the working conditions inside the working place. Okay, that working condition of the workers in the working place. Okay, then the strike when they have made, or the efficiency of the workers or management, okay, cannot be shown in the books of accounts. Okay, students, these two measurement, that concept will do, I think, in this class. Okay, I will show you how to learn here, 1 or 2 question answers available. Okay, I will show that question answer to you. Define bookkeeping I have shown you yesterday. Here, what is meant by accounting concepts? Okay, accounting concepts. Accounting concepts, here I will show to you on the side. Accounting concepts. Okay, that second question. Accounting concepts are the basic assumptions or conditions upon which accounting has been laid. One point. Okay, then second point. Accounting concepts are the results of broad consensus. Okay, then third one. Accounting concepts provide unifying structure to the accounting process and accounting reports. Okay, only 3 points. Okay, then the second question, one question over. The other question, only monetary transactions are recorded in accounting. Explain the statement. Okay, so that one is the second concept. Okay, money measurement concept here. Okay, this concept implies that only those transactions which can be expressed in terms of money are recorded in the accounts. Okay, then second point, you see that transaction, next paragraph. Transactions which do not involve money will not be recorded in the books of accounts. Then third one, for example, the working conditions in the working place, strike by employees, efficiency of the management, etc. will not be recorded in the books as they cannot be expressed in terms of money. Then you can write the one more point because it is 3 mark. No? It helps in understanding of the state of affairs of the business as money serves as a common measure. Okay, up to that you can learn. Okay students, here then the other 2-3 concepts we will learn in the next class. Everything I am not giving you. Okay, so you listen to this video and you try to understand, because the concepts from the lesson itself we have learned that it is the foundation. Okay, that means the conditions and the assumptions that means above which the accounting has been laid. So to be a good accountant or to learn accountancy good, you have to learn these concepts. That's why I have explained only 2 concepts. Okay, try to learn these 2. Listen to this video either once or twice. Okay, and try to listen. If you have any doubt, you can ask in the Monday's class. Okay, that Google Meet. Okay students, thank you very much.